What are TP and SL in crypto futures trading? TP and SL mean take profit and stop loss. It is one of the most important risk management tools in futures trading. Take profit answers one simple question: where do I want to close the trade if it goes well? Stop loss answers a different question: where should I close the trade if I am wrong? For example, imagine Bitcoin is at $60,000 and you open a long position. You may set a take profit at $63,000. That means if the price reaches $63,000, the trade can close and lock in profit. But you may also set a stop loss at $58,500. That means if the trade moves against you, the position can close before the loss becomes larger. So TP and SL are not about predicting the market perfectly. It is about having an exit plan before the trade becomes emotional. You also do not always have to set both take profit and stop loss together. In some cases, a trader may set only take profit. In other cases, a trader may set only stop loss, or both can be used at the same time. For example, if you only set take profit, you are planning where to take profit if the trade goes well, but if the trade moves against you, there may be no stop loss to limit the downside. If you only set stop loss, you're planning where to exit if the trade goes wrong, but you may still need to decide manually where to take profit. So TP and SL can be used together or separately. The important thing is to understand what each one does before starting the trade. There are different ways to set TP and SL. The first method is price. Price means you choose an exact market level. For example, take profit if Bitcoin reaches 63,000. Stop loss if Bitcoin falls to 58,500. This is easy to understand because it is based on the chart price. The second method is PNL. PNL means profit and loss in money terms. For example, close the trade if it reaches plus $50 profit, or close the trade if it reaches minus $25 loss. This method focuses on the money result of the position, not only the price level. The third method is ROI percentage. ROI means return on investment. In simple terms, it shows the return on the margin you put into the trade. For example, close the trade at plus 10% ROI, or close the trade at minus 5% ROI. This is useful, but beginners need to be careful. ROI percent is not the same as price movement. If leverage is used, a small price move can create a much bigger ROI change. That is why ROI percent can move very fast in futures trading. Some platforms also let you choose which price reference triggers TP and SL. Two common options are last price and mark price. Last price is the most recent traded price on the market. It reacts quickly because it follows the latest trade. Mark price is a more stable reference price used in futures markets. It is designed to reduce the effect of sudden spikes or very short wicks. So if you use last price, your TP or SL may trigger faster when the latest traded price touches your level. If you use mark price, the trigger may be less sensitive to quick temporary moves. Neither one is always better. You need to understand which price reference your stop is using. This is especially important in fast markets. Now, in futures grid bots, there are also extra TP/SL settings. These settings are not just about one manual trade. They can decide what happens to the bot and to the open positions when a stop condition is triggered. One important option is close all positions on stop. This means that if the bot stops because of a TP or SL trigger, the open positions should also be closed. If this option is disabled, the bot may stop, but some positions may remain open. Then you may need to close them manually. This is very important to understand. A bot stopping does not always mean every open position is closed. Another related setting is close all positions. When this is enabled, the system is instructed to close all positions if the grid stops due to a TP or SL trigger. When it is disabled, the grid may stop, but the positions can remain open after the bot stops. So before starting a futures grid bot, you should know what the bot will do when TP or SL is triggered. Will it only stop the grid, or will it stop the grid and close the open positions too? That difference can be very important. TP or SL is not a guarantee that every trade will close at the perfect price. In very fast markets, there can still be slippage or delay. But TP/SL is still one of the most important tools for planning risk. The simple way to remember it is this: take profit protects your profit plan. Stop loss protects your risk plan. Price, PNL, and ROI, percent, are different ways to define the trigger. Last and mark. Decide which price reference is used. And in bots, Close position settings decide what happens to open positions when the bot stops. TP and SL are not just buttons, they are your exit plan.